Welcome to Creative Minds. My name is Emilio. I'm along with
Got Brian here.
You got Gerard.
great, and we are Creative Minds. And we want to thank every single one of you returning subscribers, and we want to welcome all our new viewers. And if you missed our last episode, episode 12, where we talk about gas prices, we talk about the electric infrastructure, we talk about the stock split. If you're interested in that, go ahead and check out our last episode. We have some good information on there where we talk about. But this week, man, the ups and downs, of course, and the war. So Brian, what do you? How was your week this week?
Oh, it was good. Still been watching the news. Same situation going on in Ukraine. Mark is getting a little. It's kind of leveling off a little bit, but gas price is still high. High as ever.
Yeah, definitely. How about you, Gerard? How's your week?
My week was really good. It kind of saw me moving across, coast from coast to coast. But one thing that I am really excited about, besides, cryptocurrency and the stock market, is the fact that we might be doing away with daylight savings. I think that has seriously been one of the waste of time and effort that one has been doing for the past couple of years. I really didn't see any need for it. So I am glad that Congress is considering it to be kind of stopped across the board.
Right. That's crazy that I hear that some places do have daylight savings and us right here do, right? And that's kind of like crazy to even hear about it. The time changes could mess up anybody's program. You know what I mean? So, like you said, I mean, what does it really work for? Let's just go ahead and keep it one way and let's just keep it pushing. Right.
Hmm.
So, yeah,
Exactly.
and this time, today's topics, we'll have our three topics as always. Today, we're going to start with our options trading and stocks explanation. You know what I mean? So, Gerard, what do you think about options trading and stocks? Any stocks? How do you explain stuff?
Yeah. From my end, options trading is one thing that I have always tried to avoid, right? Because it's just a little bit too complex for me. I always try to stick with just buying stocks and let it sit, ride the long run. But super, complex and complicated guys like Brian, I know Brian does it, so he's probably gonna be able to talk a lot more deeper on that. I avoid options trading personally, right? I haven't really made any effort to even try to get deep into it intentionally, but I do think it's something. It's a tool that people utilize to make really quick gains, and this can be done on a weekly basis, which kind of you really have to be abreast, have to know when exactly to call, when exactly to pull. So those are some terminologies that average folks that are just thinking about the stock market or currency, you have to learn, or you need to understand what those terms are. What does it mean that you have to short? What does it mean that you have to go long? So those are just terms that as you dive into stock trading, you are going to be hearing. But at the bottom line is, stock is basically the effort to own an asset. Should it be for a company that you want to be able to own, or a product, right? If you want to be able to own a piece of Coca-Cola, you can't go in as an investor as the company is live now. Well, unless you have billions of dollars or millions that you want to be able to buy a piece of the company. But it's easier to go the route of just buying the stock, which places you as a shareholder, and you're able to kind of listen to the meetings and participate in some of the calls. So that's what I would say for now about that.
Great, man. Yeah, man. And I like your intake on that. What's the beautiful thing about what you just said right now? Also, is the point where you talk about it's something that you want to avoid because you would prefer the other way of doing the investments. Now, how we talk about Brian, he's gonna get into an explanation of it. Then you have a person like Ryan, that likes this type of things and goes into the more deep end of these type of investments, which makes it great for anybody who wants to start or wants to how deep you want to get into it, to any of these stock market or cryptocurrencies. You know what I mean? So, what about you, Brian? What do you think is who is this really for? What do you think, like when it comes to options trading? What type of people you think are looking for this type of stuff?
Uh, I still look at this again as another form of passive income as well. So I just think it's just another layer that we weren't taught about, and it's very easily once you start doing it. It was just as simple when I found out about dividend stock. I was like, oh, you can just buy a stock and they just pay you for holding it, and this is the same thing. You're already holding the same stocks, and you're just making a bet that's either going to rise or fall. And that's basically all it is. It's just another layer, another tool in your box that you can use to create a passive income. So, and it's I don't think it's that complicated. If I learned it, and I'm an average Joe guy, I'm telling you, I
Yeah,
feel like anybody can pick it up. All you got to do is just simply be taught, and
right.
that's it. Simple as that.
And then the next thing about what you just said right now is like like creative minds what we have right here because we're into all three of us we are our creative minds and you know how from you expand this we might learn something out of it maybe it'll pique something that will spark an interest even more to kind of fall into depth and that's where our subscribers will come in and our viewers will like okay you know what something that might be interesting or let me hear about this so that's pretty cool you know just to you know be able to be part of something like this that can show you know whoever the average joe on how to do average things and make it, you know, extraordinary. Here's the saying:
Yeah.
bring something ordinary and make it extraordinary. So you know what I mean. This is one of those basic things. You know what I mean that can help anybody. But right now we're gonna go in a little bit earlier. We're gonna get into our, you know, gonna get to a second segment, and our second segment will be the Robinhood demo, which is where you are gonna go, Brian, as into more depth of how to do this options trading and then really explain it so that we can have more time and we're going to gather everything you need to do for the presentation. We're going to go ahead and go into our, you know, our 60-second break. We'll see you guys right now. Welcome back. Welcome back. So here we are. We're going to go ahead and go into our Robinhood demo. Brian, take it away.
Okay, you guys. This is a picture of kind of my portfolio. Can you guys see it pretty good? I just want to make sure I'm kind of zoomed in pretty good.
Yeah, yeah, yeah.
Yep.
Okay.
Looks okay.
Okay.
Good.
So I'm just gonna give you guys a quick overview. This is not gonna take up a lot of time. I just feel like it's a lot of information that some people just may have heard of. So, for an example, I'm gonna use QYLD for this demo for this first portion. So, QYLD, we talked about this in one of our previous videos. Go back and refresh yourself. It's a dividend stock. It pays you a monthly dividend, but you can also sell call options on it. So I'm just going to give you guys a demo. In order to sell call options in the stock market, you have to own at least 100 shares of any stock on the market. There are some stocks that are not allowed to sell call options on just because of the amount of money that's invested into their portfolio at the time. But most stocks can, and it's in a portfolio or ETF, most likely they'll be able to. So with anything, selling a call is basically means in the brokerage terms is that you're making a bet that the price of the share is going to rise or fall. So sell a call, you're going to basically say, hey, I'm betting that this stock will be a certain price by the end of the week or end of the month or however long you want to make your bet. But the key thing is to remember that you need 100 shares in order to do this stock, this bet. So one of the things I like to tell people from the very beginning, always know what your average cost is of your shares. So your average cost of your shares, like I use the platform Robinhood for one of my accounts. I use Robinhood's basically all their metrics are down can be found once you click on the stock. So my average cost for a QILD is $21.90. So anytime I make a bet, your bet needs to be above 21. I mean, be above your average cost. That way you never lose money doing a bet. Your average cost should always be above your strike price should always be above the average cost. So for me, if I want to say an example, I wanted to bet that QILD won't make it to $23 by the end of the week. That's a good bet for me because QILD is at making a bet at $23 is above my average cost. That way, in case it does make it to $23, I sell all my shares because that's what you're basically saying. You're making a bet that it won't make it there. And if it does make it there, you're going to have to sell all your shares at the current strike price of what you put it at. So $23 will be the strike price where I put it at. Strike price is always think of it as the number that you're going to be betting is not going to make it to. And that's what the strike price is. So again, remember, always do something above your average cost. So $21. So on Robinhood, you can easily just sign up to do options trading. Hey guys, I'm gonna kind of zoom this out just a little bit. Let me get most of my screen. Can you guys still see it? Pretty good.
Yep.
Okay.
Yeah.
Go back at one more. So all you have to do in Robinhood is just go to the settings, agree to be able to trade options on the platform. It's super simple. It's just basically saying yes. So you're going to go here to trade options. And again, I already have, I have about 210 shares of QILD. So again, whenever you're selling a call, always on Robinhood, you're going to go here, you're going to deselect buy, and you're going to hit sell. We'll get into buy calls and buy puts and sell puts at a later time. We'll just do one thing at a time on this video. So make sure you have sell call selected here on the Robinhood price menu up here. And then you're gonna over here, you're gonna pick the date that you want your bet to end on. So QILD is a monthly bet because it also pays you a dividend and it does not want to interfere with you not getting your dividend. So your dividends for QILD are normally the ex dividend date is usually on the 19th or the 20th. So all bets should be done for a dividend stock before the expiration date, which is usually a month. So for this example, I would bet out to this Friday, which will be March 18th. So sell call. So again, remember the stock price currently right now for QILD is $20.26 right now. And we're after hours doing this video right now. So basically, remember my average cost was $21.90. So if I was to make a bet right now, I would make a bet that QILD will not make it to $22 by Friday. So I'm going to click right here on $22, knowing that the stock price right now is $20.26. I will go over and hit the plus sign right here. Y'all bear with me just a minute. So there's the short call and then the contract. So a contract is basically saying you have 100 shares and 100 shares is equal to one contract. If you have 200 shares, it'll be equal to two contracts. That's where your 100 shares idea comes from. So you have to have at least 100 shares to sell a call option. So I'm just for this particular thing, I'm gonna do one contract, which is equal to one share. Now, Robinhood has a limit price that they're willing to pay you per share amount. So it's going to be anywhere from 0 to 5 cents on this particular stock. So just a little tip: Robinhood is definitely not going to pay you the max. They're always going to pay you somewhere in between. So I usually tend to do it somewhere here in the middle. So we're going to go 0.0, we'll do 0.03. So remember, again, I'm making one contract, which is equal. They're going to pay me 3 cents per share, which is going to add up to $3. So I'll get a $3 credit just for making this bet. $3. That's all I'm going to get for right now. Now this is the middle of the week because we're filming this on Wednesday. The best time to make your bets is at the beginning of the week. Usually, for most stocks, you'll make a bet out starting out on Monday, and then it'll end on Friday. And then that's the best opportunity for you to get the maximum credit amount award for just making your bet. But since we're just doing a demo here in the middle of the week, it's going to be a little smaller. But even $3, you beat your bank. You know, and just I love to get on the banks, but just by making this bet, you're making a bet that the share price won't make it to $22 by the end of the week. You're doing one contract, it's going to pay you a credit just for making a bet. Now, if the stock does not make it to $22 at the end of the week, your agreement, your bet, it ends, and you get your 100 shares back. Basically, what you're doing is you're loaning out your 100 shares until the end of the week, and then once if it doesn't make it to the end of the week, you get all your shares back, and then you start over again on the next week. And that's basically a call option. And so I'm gonna review it right here, show you guys exactly what's gonna happen. Robinhood is gonna kind of want you to upgrade it. Sometimes it'll make you do it at least 5 cents, and it's gonna update it to 5 cents for this the purpose of this video right here. So I'll just update, and then it'll tell you to review your order, and then that credit is going to go right into your brokerage account, which is on the home page for you. So basically, it'll give you that credit, and then your shares will be basically loaned out until the end of the week. And that's how you do a sell call option. Now, remember, QILD is a monthly stock, so it does monthly options. So at the beginning of the month or whenever on March the 22nd, which will be the following Monday, then you'll place in another bet for a month. And there's nothing wrong because QILD barely goes up $1, so you'll make maybe $1 but still, you got to think about it. You're beating your bank no matter. You're not going to get a return like this unless you're in crypto at this point.
Yeah, yeah.
So I know it may
Yes.
seem like a lot, but for I've seen a lot of people who have like hundreds of shares, and they bet multiple contracts, and they can make about $20 a week, and they're doing that on 10 or 15 different stocks inside of their portfolio, and that kind of adds up. So
Yep.
just kind of got to remember those little tidbits. So just for an example, if it does make it to $22 at by the end of the week, the only thing that's going to happen for you, you're going to sell all your shares at $22 at that current price. That means you've lost all your shares, but the money from selling all your shares is going to go straight back into your portfolio. At that point, it will be a capital gains tax at that point because you just made a profit. Because as I said before, you always want to make a bet above your average cost. And if you're above your average cost, you're never at a loss at all. Plus, you keep the credit no matter what. The credit is yours. You're always going to maintain that no matter what. Uh, so with that, in order to get back in the game, if you want to get back into QILD, you will have to buy in back at the current price of $22, which you just sold it at. So it's really technically you made money. It's just you don't have your shares anymore, and then you have to buy in at back into the price. So it's some people say, oh yeah, that's hard. I don't look at it that way. I look at it, hey, I made a bet, I got the credit, and I got the profit from making a bet. I can wait for QILD to probably dip back down a little bit, and then I'll get back in. So now this is the part where some people may think it'll be a loss at. Say for instance, I say my call option I wanted at $22, and then the stock booms up to $30. No matter what, I still have to sell my shares at $22, even though they're worth $30 a piece. You guys kind of get what I'm saying?
Yeah, 'cause it's locked in
Yeah, it's
at that
locked in.
price.
What? So technically, you're still above your average cost, but you're selling at $22 when the share is really at $30. So I guess you
Mhm.
can kind of say, yeah, oh, I missed that potential gain I could have gotten. Uh, and that is a risk because you don't know what a stock will do.
Yeah.
Announcement could come out in the middle of the week, or just stock could just totally fail. So those are the kind of the riskier plays. So QILD again is not really a volatile stock, so that's why the credit is so low. So now I'm gonna show you guys a volatile stock, and guess what I'm going to show y'all? Tesla. Tesla Tesla is going to be one of the most volatile stocks on the stock market right now. So same
Look at that.
principle. Remember, Tesla is at this current price is $838.75 right now. Again, in order to sell a call option on Tesla, you have to have 100 shares of Tesla in order to do it. If you want to check the volatility on a stock, always go down to the statistics, and it'll show you the average volume. Anything above about 20 million average volume, and that's buying or sell, the buying and sell volume of the stock will increase its volatility. So, of course, Tesla's average volume is about 23 million shares being, bought and sold at any time. And that's average daily volume right there. So it's going to have, so the price fluctuation for Tesla is going to be extremely up and down all day. So just for example, Tesla ended on 838. Look how drastically it goes up and down. So that means it's very volatile. So it can go up and down, and I can't imagine if I go back a week. Tesla's
Yeah.
probably, yeah. You got see what I'm saying? Look at that 759, very very volatile. And you'll see a lot of the big name stocks, like especially like Amazon, Google is like that as well. Huge. They'll have like $700 days, 500, minus $500 days, stuff like that. If you really watch the market, kind of like I'm doing, you'll get to know where these stocks are going to be going. But same principle. Tesla, if you got to have 100 shares. So we're going to go down here, trade Tesla options. Bear with me just a moment. Same thing. We're going to hit the sell call. And again, and I'm just going to use an example. I do not have any Tesla. I cannot afford it. I'm not a rich man. Let me see. We're going to go down here to the strike price. So as an example, I'm going to say that I bought in at Tesla at $845. So that's where my average cost will be at. Now, for an example, I'm going to say that I believe that Tesla will be $900 by Friday. And that's a very good chance. It could swing up to $1,200 at this current rate that it's doing. So I'm going to say that Tesla is going to reach $900 by the end of the week. So sell call expiring this Friday, and then you're going to hit the plus sign here. And again, I have to have 100 shares in order to do this. So remember, one contract is equal to 100 shares. So one share, and then you have to pick your limit price. So for Tesla, since it's so volatile, Robinhood is willing to pay you anywhere from $1.29 to $1.32 per share. Most likely, they're going to pay you $1.29 or $1.30. So I'm going to go with $1.30. So you will make a $130 credit just for making this bet. Pay your car note, pay your electric bill with that. That credit goes directly into your brokerage account, and then you most likely you're gonna lose that bet if because Tesla, even if it jumps up to 900, same principle. You're gonna sell all your shares at the new price of $900, but you'll be fine because you're selling it above your average cost. But if you want to buy back into Tesla, you're gonna have to pay that $900 price tag for to get those 100 shares back, and you won't have it because you just sold all your money based at that price. So what I'm looking at whenever I do call options, I'm looking to get that credit every time I make a bet. And you can just repeat this process all the time. Now, again, you can't trick the system. So, say for instance, like I said before, you know, my average cost is 845, and then I say, yeah, I bet that Tesla won't reach, $2,000 a month, $2,000 a share. Robinhood is not going to accept that bet because that's the extreme. They're gonna be like, okay, Brian, I'll give you 1 cent, and the order won't even fill. It won't. You can't. It has to be kind of somewhere near the actual share price starting out for your bet. Somewhere close, depending on the volatility. It's not going to allow you to make an outrageous bet. That you're most likely always going to win. So like this right here, they're not going to give you anything for making a bet that Tesla's going to jump from 800 to $2,400. It's not going to do it. So it's you got to kind of don't try to trick the system because it's definitely not going to be tricked like that. So if you want to see, this is how a lot of people are creating a passive income just by selling call options every week. I think selling a call is probably the more safer option inside of the stock market. And in other videos, we'll talk about buying calls and buying puts and selling puts as well. But selling a call, because most people you can get to 100 shares depending on prices inside of the stock market, and then you can start making passive income just every week by simply selling options and just making a bet that hey, a stock is going to reach a certain point or it's not.
As long as you have 100 shares, you're able to do
As long
this.
as you have 100 shares, you get to go on
Yeah,
it.
and
And
then remember, every
and that
100 is one contract.
every
Yep.
every 100 is one contract. Even the scummiest. stocks on the stock market, they can even do it as well. Some of them, like the lower tier, any share is probably beneath like $5 or something like that. They'll most likely do like a monthly bet. But most of your kind of in between, anything after $20 a share is most likely probably going to be doing like a weekly or something with high volatility. Same thing. You guys can do the same thing with like Apple. Like if you guys own, sorry, Apple, AP, what's that? Like Apple stock as well. It has the same exact kind of volatility. You can make a good bet off of Apple. Apple kind of and Apple's a volatility stock, but it doesn't like shoot up like super crazy unless like the new iPhone is coming out or whatever. You know, but mostly it'll kind of stay the same during the week. And same principle. You just go trade and you can create passive income just off of that. Sell call again and then just place your bets. You got to be kind of close near the share price, and then
Mhm.
just make a bet. And Apple's kind of a simple one. I said if you have a lot of Apple or whatever, you can just make. Hey, I bet it won't make it to 165, and that's an $11 credit right there. I can tell you right off the top just for making that bet. And $11 every week, that can turn into a serious passive income. And then you can do whatever you want with that credit. That can go right back into your account. Sell whatever you need to guys, whatever you need to do.
Yeah.
You guys got any questions for me at all on
From my end, it's just to add, just to piggyback on what you said, Brian. About these about options, right? For our average, Joes, our average subscribers,
Mhm.
or viewers or followers. One thing that I can say is that they looking at an option from my
Mhm.
point of view is always like having a hedge. And
Yes.
when you are doing stocks or cryptocurrency, hedging is something that you want to kind of look into as time goes by, as you
Yep.
get very familiar into buying stocks and selling. The volatility kind of brings in the aspect of you, the individual, not wanting to lose at every time. So, having a hedge or hedging your bets is basically placing a second wager against the first, bet or the first, stock that you bought. For example, here we are talking about Tesla and QYLD.
Mhm.
If you own these stocks and for some reason you kind of have a gut feeling that the market is going to turn,
Mhm.
you can hedge those bets. You can hedge your investments by actually doing options where you
Yep.
are going to go and bet against those
That's correct.
stocks. So
Yep.
that's just something that, you know, people should kind of think about and kind of get familiar with. Those are things that people do to be able to make sure that they don't lose from both sides. But it's again something that you want to be able to be comfortable with
Mhm.
the way you kind of place the bets or how the
Right.
market works or what are the implications, as we're going to be talking about the taxes on capital gains. But I just wanted to bring to light that option of hedging and how that helps or how that could be a problem when you're buying stocks.
And Gerard, I just want to plug in one more piggyback in there. Uh, just as a precaution, one of the common mistakes, and I did this back when I was first learning this: never make a bet, sell a call below your actual average cost. Say, for instance, if the stock was like $20 right now, and I
Yeah,
say I want to sell a call. Remember, you have to always know that selling a call, the direction should be going up, like you're going up the ladder and not down. So never bet a call beneath uh, the strike price of the actual share price, because if you go below that, that means at the end of the week you're saying that you'll sell a call when it's 19. So that means you'll sell all your shares at $19 by the end of the week. So
yeah,
that's what that means. So
Yeah.
you'll always want to sell a share above what the price of the stock is.
yeah,
Yeah, that was a common mistake. I did that, and because I was like, man, I got a good bet for that, and then at the end of the week, I sold all my shares for lower than what I had, and it was just experimentation. So I'm telling you guys from experience,
Yeah.
always sell above your average cost, no matter what,
yeah,
And,
and
and
you'll
just like you
always
said,
win.
Yeah, definitely. And just like you said, like based on like your experiences, is something how you learn. And for the average Joe, of course, just like myself, also, if you have any more questions with this, YouTube, man, just check out YouTube videos.
Yes.
Because I know you're already here looking at us, and you kind of hearing it if you are hearing it for the first time, you know what I mean. Go ahead and go on YouTube, man, and just go ahead and look up these type of option tradings. It was pretty clear how you explained it, and it was pretty dope, the concept of it. You know what I mean?
Yeah.
And the capital gains that you're gonna have, which is something real quick that we're gonna get into also. But yeah, whoever the average Joe, as long as you have 100 shares, you're able to have that option in your Robinhood account. You know what I mean? So just go ahead and go and test the waters. But we are not no financial advisors whatsoever. Do your research and just contact your financial advisors for anything. You know what I mean? So other than that, I mean, we're gonna go ahead and roll into our third one, which is the capital gains. Now, Gerard, can you really, because you mentioned the capital gains too. Now, in this, how he was explaining the options tradings, right? And he was betting with the with the market and how much the how much was the going to be the capital gains that he was going to get because he understands the capital gains. What is capital gains for the average Joe that doesn't understand what a capital gain is?
Yeah, from my perspective, right? Capital gains is basically um, taxes that are owed on the profits from the sale of most investments, right? So let's say you invest, should it be through Merrill Lynch, or should it be, through your stockbroker, or you are doing it through Robinhood? Any gains that you get on top of your investment, if you put in $1,000 and you make $2,000, and then you decide to pull that money out, right? That's when you kind of get hit with capital gains. You have to pay tax on that gain that you have, obtain from the market. So in lay terms, it's basically if you make $1,000 in profit, you have to pay tax on that $1,000 gain. So now you have 2,000, but you have to pay tax on $1,000 that you've gained, right? So it's basically knowing that Uncle Sam is always there, and you are going to have to pay his share, regardless of what you make and pull out of the market.
Yeah, that was great, man. Great explanation, man. Anything else you want to add on to that, Brian?
Yeah, and the same thing. Just what Gerard said. If you sell a stock and you've made profit on it, just expect hey, put a little bit of that away because Uncle Sam does want his paycheck, off your winnings. So and another thing with this call option thing, like you can see, this is what your members of Congress are doing as well. When they say that they're betting against inflation, all they're doing is making call option bets, saying that, hey, I believe that the SPY is going to be double by 2030, and that's exactly what Nancy Pelosi, most of your members of Congress are saying. The only thing that they're doing is doing exactly what I just told you guys about. So, like the SPY, for example, I just want to show you guys this before we move on. The SPY, like how they believe that inflation is going to take the market up higher, how everything is going to keep getting expensive. They're saying that the stock market will be a lot higher. We'll have a lot more money. They're basically making bets, doing the same thing, selling a call option, and for the SPY, you can go out years. You can go out to 2024 on certain platforms. You can go out to 2050. They're just making a 10-year bet saying that, hey, I believe the stock market is going to be at, the S&P's 500, the SPY, I believe it's going to be at $800, in 2024. That's exactly what they're doing when they're making their prediction. That's what they're doing. They're selling call options or buying call options, collecting that credit. By the time overall, they'll get that credit up front, and then if even if the stock is not at that price, it doesn't matter because they've gotten that credit. So that's how the politicians are making money. Anybody in big business, anybody in the market, they're just hedging their bets on how the market is going to be in the future. So that's just an example. And if we're average guy, if I'm an average guy doing that, I know what my politicians are doing, and or your people in Congress, they're making a bet against the market. That's all they're doing.
Right.
It's just as simple as that.
Yeah. And
Cool,
then
man.
just to add to that, we do have short term and long term, right? Capital gains, right? Short term within 0 to 12 months within the year are short term, and you also have long term capital gains, which are for profits that you realize for more than a year, and these are taxable within different rates, right? So the short term, I think it can go up to 37%, between 10 and 37%,
Oh,
and then for the long term, it can go from 0 to 20%, which is at the rate of your income, right?
yeah,
Depending on the tax bracket that you're in. But again, these are just some of the things that is just good to read. Again,
Right.
check on YouTube videos, talk to your tax advisor. Always chat with your financial person to see exactly when is the best time to either pull those profits out or to keep them long term. But the market always wants you to keep them long term. That's why the rate for long term capital gains is lower than
Lower.
short term gains. Yeah.
Right, right, right. Yeah, yeah, yeah. That's man, that's great information, honestly. And just to, I mean, overall, as an overall thing, I just want to say that just another way of how the rich keeps getting richer, and this is one of the things is, with the market. Anybody who was like a politician who probably didn't have as much money, and they were on the grunt trying to get into these positions where they were able to have some capital to dump to the market, understanding these this information that we just that Brian just explained, about the capital gains, and something about also that helps. Well, that will help you to understand it too is if you have capital gains. Another thing is that whenever you are up for review with the IRS, which is when you do your taxes, now whatever it's Cash App or Robinhood, they at the end of the year they'll give you your they'll release like your documents of what are your gains and what are some of your losses and stuff like that. So that's something else that you want to study if you really want to dip your feet into it. Your 1099 is what they give you at the end. With for the secure for your securities. So it would break it down way more, to like reading it, you know what I mean, for you to kind of understand it, like, oh, if I sold this and I end up putting $20 in my capital, and I end up selling for 30, my capital gain is $10. So it breaks it down to the minimal stuff, so even trying to understand that, because I remember reading the paper. It's a better way of understanding it too, just going by it, you know what I mean, going for it, trying it yourself, but yeah, I mean, but now we're gonna head on to our last thing, which is our question from one of our audience. And Brian, go ahead and can you pull up the question and see what the question is?
yeah. This question here is what happens if you have losses. Same thing, same principle. You have to kind of for losses is really not going to kind of affect you. It's just going to take down your overall year on how you did. It'll kind of reduce your impact of what the government's going to tax you. The problem is if you have a large amount of gains that's outweighing your bets, you're hoping to be making money, but if you have losses, it'll kind of just deduct what you'll have to pay back in taxes at the end of the year.
Yeah.
Yeah, it's
What about you, Gerard? Any input on that?
Yeah, I do agree with Brian, right? I mean, losses basically, if you have losses at the end of the year, you might stand a better chance of not paying any, you know, too much taxes on top of what you made from your stocks or your investments. But if you have gains, right? If you have profits and you decide to pull something out, then there's gonna be taxes. That's levied onto that. So the rule of thumb is if you don't really need that money, don't take it out. Just let it sit and accumulate. There's a magic in compounding, right? It's gonna grow and grow even further. But if you absolutely have to take that money out, I will suggest you talk with your financial advisor, your tax accountant, or somebody who can give you the pros and cons or how to go about it, right? Regardless of whatever thing you do, just be reassured that the institution or the broker that you are working with is always going to provide you the tax document. So that's something that any average Joe shouldn't be concerned about. What are they going to do at the end of the year? Where are they going to get all that information from? If you are, banking with Bank of America or Merrill Edge or Chase or anybody, or you're doing yours with Fidelity, they will provide you the breakdown, whether it's the 1099 or the Schedule K or whatever that you need for your taxes. That will be provided to you. So you just need to be careful. Just know what you're putting or what you're investing in, because if you pull money out, you are bound to pay Uncle Sam something. So it's all left to you to make that decision.
Great, 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 man. So we covered a lot. We covered a lot of ground with this today. Appreciate Brian. I appreciate Gerard. It's another day. We want to thank all our returning subscribers, and we want to welcome all of our new viewers. We hope you liked today's segment, and hope to see you back next week. Is there anything else you want to say to anybody or anything?
Yeah, I just want to say thank you guys again for liking, commenting, subscribing. Take this information slow. Don't rush out to do anything. Only afford to put in money that you can afford to lose. So don't overbet anything.
Cool, Gerard.
Thank you to our viewers. Thank you to our subscribers. Please, if this is your first time watching, just subscribe, like us and share. Let your friends know about what we're doing here. We would definitely love to have, friends or any experts, to be part of the show. So if you're interested, let us know. Drop a comment. Let us know what you think about options, stocks, and anything on our YouTube page. As we would love to keep in touch. Until then, thank you. Back to you, Emilio.
Yeah, for sure. So thank you very much, everybody, for tuning in. So we'll see you guys next week, and we are Creative Minds. Peace out.
There you go. Take it
Ciao.
easy.